Welcome to Stock Odds, Odds and Ends, Hurricane Hillary edition, I guess, right? Hey, Rob, how's it going?
What are you doing down there in Southern California? What's going on?
We never get hurricanes down here. It's silly. I mean, it's just going to be a tropical storm, a year's worth of rain in 2-3 days, but a year's worth of rain isn't much out here anyway in the desert. But
A year's
I had to make
what is
I
it
made
like?
three. I made 3 sandbags today. Wow, my day
Oh,
is today.
you had to take off your white gloves and do sandbags. That's manual labor. You shouldn't be doing that.
I had to bring the car inside the garage so it doesn't get wet.
Yeah, the Jag doesn't like rain for some reason. What's going on?
Yeah,
Well, you wouldn't want it. You wouldn't want things damaged. Do you have to shutter or anything, or no? You're good.
no, they're just flood warnings in low areas, and it's. I mean, for the most part, it's just heavy rain for a couple of days.
Well, here's the strange thing about the day and age we live in. Half the world is on fire, and half the world is flooded.
Yeah,
Right?
much water, but not enough.
Like, think about that, right? That's craziness. I mean, in Canada alone, there's 5,000 forest fires.
Wow.
So, and we got it on islands and all over the place, and besides Hawaii, there's other islands that are on fire too. Well, Maui's been put out, but yeah, so just crazy weather disturbances and another very, very hot year. El Nino certainly playing into it. And that's probably why the warm Pacific has spawned that hurricane for you guys.
Yeah.
Now, why do they call it a hurricane over by you since it's in the Pacific Ocean and not a typhoon or something?
I don't know that. I don't know much about it because we don't experience this much.
All right. Well, good success down there. Hopefully, your sandbags work.
Yeah, but what's interesting is like insurance companies started sending emails, things you can do to be proactive. So they're at risk this week too, right? Of damages, especially if they're in flood and water damage companies. So that's the play. I can see weakness on insurance stocks.
Well, I mean, you can see weakness, but you also can be baffled by their strength. And part of this problem is that anytime you get calamities, it gives them the ability to raise rates, in other jurisdictions or in the same jurisdiction for people that would renew. And so, that can be a positive in terms of revenue. So it's really a tricky space when you go, hey, we got a hurricane approaching California, or normally it's Florida or something, and so you think, oh, look, who's all the insurers down there? I'm going to short them all, and then you kind of scratch your head as the stocks rally, right? So, so just be careful of that kind of macro connection, because it's the same kind of thing that you find where a company lays off employees, and most people would right away think, well, they're not doing very good. That's a negative, and and that could be the case, like we saw with Meta's earnings declining, and they did lay off a bunch, right? But at the same time, when you look at it from revenue per employee, that can be a very good move, and it could boost the stock. And in Meta's case, obviously, it did gain some traction after that. And there's a lot of extra bodies that probably were brought in with a lot of the stimulus that happened, right? And support for companies and hiring and stuff like that. So there could be a lot of extra people that are not necessary to boost revenues, boost operations. And so that's why Wall Street looks at it as a good thing. When you lay off a bunch of people, it can be very good for investors, right?
Yeah.
So could be the same with insurance stocks. It's like, well, they're going to raise rates again, and everywhere else is going to be paying more. But all right, well, let's get through some of this. I know you got time is short because you're about to be bombarded. So here's the Friday's performance in terms of the sectors. And again, this is the broad exposure, not just the S&P 500. So you may see a bit of a difference between the ETFs and the group that's designated here, but it's close. So for Friday, we had energy bounce back. It was down a bit on Thursday, but for the week, it was still in the top 2. The whole group, I mean, all the groups were down for the week. And consumer cyclical down a lot, and that was on the back of the retail We had a lot of retail news and stuff. So the market's taking the cyclical group to the cleaners there. Plus Tesla is a big part of that and was sliding a bit. Basic materials down. I mean, if the dollar strengthens, there was some cause for rates to go higher again. Considering the treasury renewals that have to happen. I mean, the government debt and all that kind of stuff. So rates were, starting to perk up a bit in terms of, like there's this thing that while we're expecting the Fed to be mostly done, maybe one more this year, but this other argument of, wait a minute, rates may stay higher for longer, and in fact, they may have to again raise. So that kind of put a little bit of a problem here in terms of, the great performance that we had all the way to the end of July, the window dressing and so on right there at the end, and then coming into August, the Fitch downgrade, then the Moody's, downgrade and watch on the banks. Fitch again coming out with some more on the banks, and considering all the economic news that, even good news could be bad regarding the inflation, regarding the interest rates. So that's the kind of transition that we experienced here so far in July, and even this week here, you can see the SPY selling down. We had some high signal on Thursday near the end, but look at we almost closed at the low on Tuesday, almost closed at the low on the 16th on Wednesday. On Thursday, almost at the low again, and then Friday was expiration, which did fill that gap a little bit. But expiration is often like that. We don't necessarily go anywhere, but it did manage to bounce back a little bit. But overall, just this slide is part of this lack of liquidity in August, the news that's kind of overhanging, and then this information that might be contrary to the wonderful optimism of the market, looking forward. But we've already had such a great run. So, this comes on the back of that. So this is where we opened Monday. Did move up a little bit on, so Monday was right here, did move up a little bit. And then from there, it was heading down. And we did see a lot of evidence of selling the rallies. That means that there's some profit taking going on, because that's the best time to sell, is when it's up a bit and you want to unload. You don't want to chase it down and make matters worse by trying to, hit the bids all the time. So when things turn around and start to rally, that's a great time to sell something. So here's the ETF performance and review for the week. We see that IWM, the Russell, was the worst performing. Again, that speaks into the concerns about growth, the concerns about higher rates, things like that. So it's very sensitive to that. So IWM is like extremely optimistic if things are going to be good. And on the other hand, if there's concerns, it usually performs worse. As far as the tech, I mean, XLK held up okay. Some of the bigger cap stocks in the ETF were responsible for holding it up better. And the worst performer was, discretionary. And so we see a little bit more of a defensive posture for the week, with healthcare doing okay, utilities not as bad as they've had been. And XLP didn't do great. And energy was performing pretty good for the week overall compared to the others. And then communications, which does include Google and Meta and so on, but down on that one. Basic materials affected by the dollar. Here's the previous week's map of the market. So look at NVIDIA. Now, NVIDIA has earnings coming up next week, right, Dave?
Yeah, Wednesday.
So this is interesting. I would recommend going and looking at the chart of NVIDIA. It's one of the drivers for the semis as well as this whole AI tailwinds thing. And then there's been a lot of big companies that have been buying lots of NVIDIA chips and ordering lots of NVIDIA chips. So something going on there. But you can see the difference between the rest of the group and NVIDIA. So this will be an interesting story going into next week. You see, just kind of a splattering of green in the week. But look at this healthcare area: Lilly and Merck, Pfizer, BMY. This is interesting. That might be part of the expectation of, what it looks like, going into the fall. Maybe, a lot of times groups and even symbols run ahead of events that may occur or expected later on. So that could be part of it. Or maybe it's just all the smoke that Canada's sending to the East Coast. It's like, well, now we're going to have more respiratory problems. It's we need to buy drug makers here. Mm-hmm. Anyway, last 5 days of seasonality. Now that starts on Friday. So what's your thoughts on this one, Dave? The last 5 days seasonality. It starts Friday, so this week is really benign. Like, we don't have seasonality this week. We're in between expiration and the last 5 days. Yeah. One thing I want to make a note of is that typically we look for a change in direction after expiration, right? So we just had that on Friday. The whole week of mid-month seasonality and expiration kind of went as expected. And seasonality is a big component. And now we come into this nothing week, but it starts on Friday with last 5 days. Now, when it's split over a weekend, you have to think about the impact of that. It could mean that nothing really happens related to this on Friday, or it could be a bounce back Friday, kind of like what we saw on expiration. Mm-hmm. So what's your take on this there, Dave?
Well, the last 5 days shows a lot of strength in NASDAQ kind of stocks. When you look at the individual stocks too, it's a lot of the high beta stuff, the ARK kind of funds, and the stuff that's shorter is more your stable basic S&P stock. So the theme would be strength in NASDAQ, and especially if this week is kind of muted. We've already had a discount from last week, right?
Right.
Sold off heavily. So we could get a nice mean reversion for on two fronts. We're coming from that discounted position last week, and then going into that final week with a little more tech heavy.
No, that's good thoughts. Yeah, so this is a very interesting week. Now it could be that, anticipating that the last 5 days are good, that there is a bit of front running of that. So it is possible that we come from the third Friday here, and even though we have a lull week, they anticipate that the end of the month will be better, and they start to rally it this next week. That is possible. So it could continue down lower, it could be sideways, or it could actually rally a little bit. But this is definitely the thing to point out here is the end of August is definitely a change from the rest of August.
Yeah.
Okay. Definitely a change. So you guys can go to your seasonality almanac and look it up for yourself. I wanted to talk about optimum list tracking here. So we produce 3 lists: risk on, risk off, and neutral. And if a person were to choose correctly the list to employ, so just to refresh your memory again, risk off is long consumer staples, healthcare, and industrials, and short technology, communications, and discretionary. And it's the opposite for the risk on. The thing is, it's not just a flip of the symbols. There are new symbols, or mostly new symbols in each of those lists. So it's not just a flip of the symbols. Okay. So there is some statistical relevance to that beyond just the sector approach. But if you grabbed a sector that was expected to be hot, and you went and chose your symbols statistically that were the best fit for the top expected performers of that sector, then you would have this sort of alpha over the sector potentially as well. So that's what you're looking for, is the optimum bets and the optimum conditions to deploy those. So if you're coming into a day, just to give you a little bit of framework, If we're gapping up, that means that a lot of the stocks that, are high volatility or expected to perform really well could be moving already in the pre-market and gapping up excessively at the open. So when we're gapping up, sometimes the best list to choose is your risk off list. And when we're gapping down, that means some of these high beta, high volatility, maybe fundamentally they got a lot of debt, high P, whatever. But when they gap down, they often gap down too much relative to the indices. And then when they rally back and fill the gap, that's where you get your great performance. So sometimes the best thing to do when you're gapping down is actually choose the risk on list. So that's counterintuitive. Now, when you don't know, the best thing to do is just stick with the neutral. But when you have good information, you have this choice of risk on or risk off. So just tracking, since June the 7th, when we started these risk on, risk off type approach here, this is the average per day, 0.34%. And for the open to close for the SPY, almost flat, and close to close for the SPY, even though you had a rally in June or in July, it's still almost flat in terms of yield per day on average, right? So this is substantial. Now, what if you could hit 70% accuracy on choosing the right list? Then you would probably have, 3/4 of that performance, and that's still above the benchmark that we talk about, which is 0.1% return on capital. So so there is something to aligning yourself correctly with the sectors that are favored for the day. And we keep it pretty static. Now, we could bring in energy, we could bring in basic materials and all that, but some of those have higher volatility and they're less stable. So this is the sort of the three most stable long sectors and short sectors for those lists. Now, the neutral is just one symbol long and one symbol short from each sector. So it isn't balanced as far as industries, but it's same sector. And you want that mix because you want it to move around. You want some opportunity. If you were only matched in the same industry, it would be extremely efficient and you probably wouldn't make much of anything. So that's why one per sector works. It's loose enough to give you some performance, but it's protective enough to insulate you from those bad days. And you can see some of these bad days on the SPY down 0.79, and yet the return on capital for our list, even neutral, was exceptional here. So that's something to build on and to grow in and to learn more about. How do I choose the right list for the day? Or could you combine a list, like you do a neutral list and then you do a risk on list? Could you do that? So that's what we're looking at here. Okay, why don't you finish up with the economic calendar?
Yeah, there's some things for the week. It has to do with that's called homes. So on Tuesday we have existing home sales, and Wednesday new home sales. So that's going to be a key driver for the week. And then we have some Fed speak as well. There's this Jackson Hole Summit where Powell's going to be talking on Friday, and then on Thursday there's going to also be some other Fed officials talking there as well. So the market's going to be focused on how many rate hikes and the tone of their speeches, and are they going to keep raising or stay put? But otherwise, it's more housing data earlier in the week. And then we have some earnings. I don't know, the next slide.
No, I didn't put them. You can just read them off.
Yeah, so earnings-wise, Monday we have Zoom video, but Tuesday, again with housing, we have Toll Brothers earnings. And Wednesday is NVIDIA. That's the big one. So heavily watched in terms of tech and AI. And then Thursday is Dollar Tree and not much else. But on NVIDIA, last week, mid-month seasonality picked it up as a good long. Also, the third Friday, Almanac picked it up as a good long, and they had that AI tailwind to it. So it had a lot of bang for the buck, and the Almanac was pretty dead on correct for that one. So,
right. Just look at the weekly, what it's done here. So this last week performed pretty well. Again, like you said, mid-month seasonality. Let's just look at the SPY here for the weekly, and you can see how we've pulled back to this 50. Well, we're at the 20 period. So this is 20 week, 20 period, and then the 50 period and the 200 period. But that's 3 weeks in a row here that the SPY has pulled back from the open of the week to the close of the week. And so there is, even though it looks like it could fall a lot farther, which it certainly could, that would probably have to be somewhat catalyst driven. You wouldn't get it just on light volume and lack of commitment, lack of participation, people still on vacation. You probably wouldn't see that. You would have to have some kind of a catalyst that is a bit of a surprise in order to have a massive move down and, plunge us into really oversold conditions. So could it happen in September? Certainly. September is one of the worst performing months of the year historically. So it's possible that, we build on the downward move here and continue. But it's possible for next week or the week following to have a bit of a bounce back. So Friday we saw an up day open the close, and we are below the 50-day moving average. So there is a bit of an air pocket here, and we're also kind of sitting on this June 26th low. So that would be where we're not quite there. That'd be what I would focus on, is the 431 level, and we're currently at the close was 436. So we're quite away from that, but that would be what I would lean on, is that June 26th, which is we just finished the Russell rebalance, and so all the symbols were locked in with the new exposure on the Russell, and then from there we rallied. We had our June rally and then summer rally. July continued, and then since then we've been selling off. So yeah, that would definitely be a level that I would lean on right there. And if we retrace next week, then that could take a little bit of the end of the month 5-day rally off the table. So it just really depends, as you said, Dave, what happens this next week. So with that, we'll let you guys go. Thanks for your attention, and Dave, have a good day. Good luck with the hurricane there.
Thanks a lot. Good luck.